Well, more recently, the signs on the Chinese economy are a little bit better. It does appear that the economy is responding to these various selective easing measures that have been put into place. In particular, the relaxation of mortgage rules appears to have led to a pretty rapid rebound in sales of houses. And the real estate sector has been certainly one of the big worry points for the Chinese economy. The inflation is certainly not an issue at all. Inflation, if anything, is threatening to be a little bit too low. Now, I haven't seen the details of the numbers yet, but this time the slowdown in inflation, unlike in previous months, probably did not come from food prices, but rather from non-food prices, and in particular energy. And what that means, of course, is that the central bank is not constrained by worries over inflation in its efforts to keep growth going. But it does look as if the economy had stabilized. I'd be very doubtful that the economy can meaningfully accelerate, but a growth stabilization would actually be pretty good news. Well, it's true that the U.S. labor market report was a little bit disappointing, but I would really stress a little bit. If you take into consideration the slight upward revision to the previous 2 months, then the payrolls really came in more or less as expected when you look at the level. And I think the important part of the labor market report was that slack continues to be eroded, meaning the unemployment rate ticked down again. It's now down to 5.8%. Which, that's a pretty good reading. It's the lowest rate since mid-2008. So I think the path is clear for the Federal Reserve to sometime in the middle of next year to start raising rates.